Hello, my fellow investors, and welcome back to another fundamental analysis video. Today, guys, we're going to cover the company Chipotle. They just had earnings. In fact, we just covered this on the live stream. So if you guys would like to see Mike's grades as well, you guys can take a look at this. It is towards the middle of the live stream. It was the second company that we did. Today, though, I'm going to cover, guys, the earnings once again, and I'm going to give you guys my personal opinion on them for those of you who could not watch the stream. So let's cover this company, guys. They completely crushed it today, and yeah, it's looking a little bit expensive. It's actually kind of crazy. So with that said, guys, make sure to like, subscribe, comment. Really does help here with the algorithm on YouTube as well as Rumble. Of course, follow us on X. With that said, let's get started with analyzing earnings from Chipotle. So we got over here Chipotle Mexican Grill non-GAAP EPS of $10.36, beats by 63 cents. Revenue of $2.52 billion, beats by $30 million. If we take a look at their actual earnings, we're just going to take a look at this on the fiscal year 2023. Total revenue increased 14.3% to $9.9 billion. Comparable restaurant sales increased almost 8%. Operating margin was 15.8%, an increase from 13.4%. Restaurant level operating margin was 26.2%, an increase of 230 basis points. Diluted earnings per share was $4.34 for the year, guys. It's absolutely crazy. Up a whopping 38.4% from $32.04. And opened 271 new restaurants with 238 locations, including Chipotle. I don't even know what that is. If you guys know, let me know in the comment section below. Now, a quote from the CEO, we got 2023 was an outstanding year where we delivered strong transaction growth driven by throughput and menu innovations. Opened a record number of new restaurants, surpassed 3 million in AUVs, and formed our first international partnership with, said Brian Nicole, Chairman and CEO. I am more confident than ever that we have the right people and the right strategy to achieve our long-term growth goals of reaching 7,000 restaurants in North America, $4 million in AUVs, expanding our industry-leading margins and returns, furthering our purpose of cultivating a better world globally. These margins, guys, are absolutely incredible. I mean, for a restaurant operating margin of 26.2, it's absolutely insane to see. Most restaurants don't even run that well. Most restaurants have a really, really tight margin. So let's actually jump into now the calculator. We got the ticker for CMG, market cap of $68.3 billion, a P of 59.02, current share price of a whopping $2,487. Thing is, this isn't even that much, because as of after hours, after they release these earnings, the thing jumped 2.9%, gaining $72.26, current price of $2,560. So it's looking absolutely crazy. I do believe that this is all-time highs. If we take a look at this on the 5-year, yeah, guys, we are at all-time highs, 52-week range of $1,470 to $2,506. When the 1-year perspective, this is up 46.31%. Year to date, they are up 8.78%. So very, very interesting. I'm really curious as to what price we should pay for this company, because a lot of people say, in fact, I had somebody, Michael Anthony, on the live stream saying, I would never pay $1,000+ for a company. Well, the thing is that what price are you getting for it, right? What price are you getting for this? What value are you actually getting for this company? Because for all you know, $2,500 may be cheap in comparison to what you're actually getting in the form of future free cash flow. Coming back over here, we can see that they don't pay out a dividend, but take a look at these free cash flows on the 5-year average and last year's. 5-year average free cash flow, $7.5 million. Last year's free cash flow, $1.4 billion with a B. That's a massive rise, right? That's an insane rise. I looked at that and my head just blew off, because that kind of rise is so incredible to see. We're going to look at this further in the graphs. So taking a look at the net income, when we saw this thing, we were completely dumbfounded. Look at this. It's nearly perfect. Even during COVID, they increased, going from 5 years ago of 350. By the way, 5 years ago was 2019. 5 years ago of 350 million to 1 year ago of 1.17 billion. This is actually a lot higher. If we take a look at their actual earnings, we can see that all the way down here, about a quarter way through, year ended December 31st, 2023, coming down here to the net income, guys, we got $1.23 billion. So yeah, that is a lot higher. So you can see that this graph is absolutely crazy. Even during COVID, they gained $5 million in net income. That's an increase on the 5-year of 234%. I'm going to give this guy's 100%. Absolutely perfect. Free cash flow. Now, free cash flow looks a little bit bad in comparison to that of net income. 5 years ago of 388 million to 1 year ago of 1.4 billion, increase of 258%. They did dip on this one when it came to the free cash flow 4 years ago during COVID, but you can see that they rebounded nicely. And then 3 and 2 years ago, essentially flat. They did gain around $5 million or so. All in all, though, I'm going to give this a 90%. And when taking a look at the revenue, this thing looks almost fake. The 4 year ago value barely doesn't even touch the trend line, right? It gets really close. 5 years ago of 5.6 billion to 1 year ago of 9.54 billion, increase of 70.70%. That, guys, this is an easy 100%. The assets minus liabilities, once again, looks really, really good. Pretty big jump from 2 to 1 year ago, but all in all, it's actually not even too bad. Average total assets, 7.1 billion. Liabilities of 4.6 billion. A difference of $2.5 billion. I'm going to give this guy's 100% as well. The cash flow minus the liabilities doesn't look too good. You can see that from 5 to 4 years ago, they did go down pretty massively. But ever since then, they've been just stagnant at around the $3.5 billion mark. Negative, right? Negative. So as you guys can see, it's stagnant, but it's not at least getting worse. 1 year ago, they did negative 3.7 billion. The average, it is negative 3.52 billion. I'm going to give this guy's a 70%. And when it comes to the shares outstanding, not fully buying back, but it's actually not as bad as you guys think. 5 years ago, look at this, 27.8 million. This is why the share price is $2,000. They have no shares outstanding. To today of 27.5 million. That is a buyback on the 5 year of 1.08%. Previous year to the current year, a decrease of 0.36%. Now, the reason why I'm saying that this is 100% for me, even though they did increase from 4 to 3 years ago, you guys can see that they increased it because of COVID. So I'm not really annoyed as to why they did that. I see this and I'm like, they know when to issue shares and they know when to buy back shares. So I really do like this. That's why I'm going to give this 100%. And lastly, cash and equivalents. They currently hold $602.3 million with an average of $582.1 million. And this results in an overall grade of 95%. Yes, this is a 90 plus company. Their fundamentals are absolutely incredible. They got 4 100s from me, a 90, and the worst one was the cash flow minus the liabilities, which it was just stagnant, but honestly, it's not even that bad. Perfect company, 95%, A plus for me. Now, what price do we pay for this? This is where I might turn off a lot of people here, but at the end of the day, guys, every investment is the present value of all future cash flow. So if we take a look at now the discounted free cash flow, we could see that on the base case, not adjusting for debt, $688, and then adjusting for debt, $617. So a lot of people are already probably screaming, but follow me here, right? Follow me here. Let's input some predicted share buyback. I'm going to say, guys, -2, 0, and 2% buyback. I think that this is fairly fair, seeing that they issue when they have to issue, they buy back when they have to buy back. So I think that's fair. 2% isn't even that much. Now, for the revenue, Seeking Alpha is currently showing around 14% in their forward revenue growth. So if we take this number, I'm going to say for the lowest assumption, let's say 10%. For the median, let's say 12%, and then for the highest one, let's say 14%. Basically, guys, if you want to get a 10% required rate of return, and assuming these predicted share buybacks and these revenue growths in the next 5 years, we got $953.22 to $1,131.17 for the highest assumption. And then adjusting for debt, $883 to $1,058. Margin of safety of 5, 10, 15, $750 to $1,000. So a lot of you guys are going to be like, oh my God, the stock will never fall there. Guys, this is not telling you that, okay? I need everybody to understand this. This is not telling you where the share price is going. This is telling you what price you should buy the company in order to get a 10% required rate of return with a 2% buyback if the company buys back 2% of shares in the next 5 years and a revenue growth of 14%. By all means, if you want to lower this, like if you want to get 7%, which is what the lower end of the S&P 500 gives you on average, well, now this shoots up to 1,900, right? So again, guys, every investment is the present value of all future cash flow. I look at this and I'm like, this is an expensive company right now, but at the same time, it really just depends as to what you believe their growth will be like, right? 7,000 restaurants that they want to do in the United States, that's massive. So it really just depends up to you. I look at this, Perfect fundamentals, mwah, chef's kiss. Price though a little bit much. All in all, I actually do like the company. Mike likes it too. It's an insane company. You know, even with they had problems with like E. coli back in the day, they survived it. You know, they survived COVID, and they actually made net income. They actually had income come in during COVID, so that's great. They were actually still open during COVID. At least somebody in chat told us during the live stream. So yeah, it's an insane company. I love them. Just too expensive. So there you guys have it. That's just my 2 cents on it. So make sure to like, subscribe, comment, guys. It really does help with the algorithm on YouTube as well as Rumble. Follow us on X. And we are live streaming pretty much every day now at 7 p.m. Eastern to roughly 9 p.m. Eastern Standard Time. So if you guys do want to catch us, we'll be live streaming on YouTube and Rumble. Maybe just Rumble depending on what tomorrow happens. But for now, YouTube and Rumble. So guys, with that said, peace out, and we'll see you all next time.